Welcome back to another video here at Fiscal Voyage. I'm Felix, and this video was suggested by Janice. They wanted to see Skyworks Solution. I personally never heard of the company before, and after doing this video and researching, I found it very interesting. Towards the end of the video, I'm going to provide a fair value price, so make sure you watch it till the end so you can see the fair value price as well as my recommendation if it's a buy, hold, or sell. So with that, let's start the stock analysis of Skyworks to determine if the company at current prices is a buy, hold, or sell. Starting now. Okay, let's start with the stock analysis on Skyworks Solution Inc. The ticker symbol SWKS. Skyworks is an American semiconductor company headquartered in Irvine, California. It manufactures semiconductors for use of radio frequency and mobile communication systems. Its products include power amplifiers, front-end modules, and RF products for handsets and wireless infrastructure equipment. Some of the company's portfolio includes amplifiers, actuators, circulators, demodulators, detectors, doors, and etc. So they're in this technology space. So if we look at the fundamentals, revenue grew at a compound rate of 13.6% in the 10-year time period of 2010 to 2019. Net income grew at a whopping rate of 22.6% in that same time period. And the 5-year revenue average is 32%. So they grew revenue in the past 5 years, basically double of the 10-year average. Net income in that same 5-year period, however, was only 1.7%, so much lower net income versus revenue. Earnings per share grew at almost 20% in the 10-year period and only 4% in the past 5-year average. Currently doesn't have a credit rating from S&P, and operating income has been consistent with the net income at 19.1% for the 2010 to 2019 time period. If we continue with the fundamentals, last year they had earnings of $5.59. Net margin came in at 25.3, which is great. It actually expanded versus 2018 of 23.7%. So net margin has been improving even though net income has been growing at 1% rate. Return on equity is a good 20.8%. You like to see that 15% or higher. So we got 20% here. Debt to cap is very low at 4%, so they really don't have any debt in their balance sheet. However, current dividend yield is only 1.66%, which is low. However, it is better than the 5-year dividend yield average of 1.51%. Currently, the company has a payout ratio of 32%, and they've been growing dividends for the past 5 years. So they are now considered a dividend contender, which is 5 years of dividend growth or more. The past 3-year dividend growth rate is 14.5%, and the most recent increase was 15.8% on August last year. So sometime in July or August, we should be looking at another, I presume, a double-digit increase in dividends. We can't use the charter rule because they don't have a 5-year dividend growth rate. Let's continue with the future outlook. 2020 is expected to earn $5.59. 2021, $6.46. The current earnings projection is lower than the last year earnings of $6.17. Of course, with the pandemic, that's causing an effect for the company. So earnings is expected to be lower this year, but it's expected to pick up in 2021. CFRA has a 3-year projected earning growth of 18%, which is outstanding. And my dividend yield return model comes in at 13.9%, annual return for this company. So that's real good. I like to see it 9-10% or higher. So we got almost 14% here. The current PE is 18.19 with a forward PE of 19. So that right there shows you that the earnings is expected to be lower than the previous year, and the 5-year average PE is 18.4. So based on that, it's safe to presume that the company is a little overvalued based on the historic PEs. If we look at the fast graph, the black line is the monthly closing price, the blue is the normal PE, and the orange is a PE of 15.3. As you can see here, the company is higher than both the orange and blue lines, representing a slightly overvalued here. It looks like the company likes to follow the blue line, the normal PE of 13.8 or 14. So there's been time periods where it's been under both blue and orange lines. That's where a good time to buy. Right now it's actually higher, but because of the projected 5G growth, it is a semiconductor company, so a lot of chips and things like that are used in our everyday lives. So that's why CFRA has a high projected earnings growth for the next 3 years. So with that, let's look at the fair value price. CFRA has a $97 fair price, Morningstar at 105, FastGraph at 89, Yahoo at 112, and my dividend discount model analysis at 114, which is basically the 10% increase in dividends for the next 3 years and 9% after that. So I was very conservative here. That's how I got 114 still, which is pretty good. Averaging out the fives, we get a fair price of $103.86. Currently, the company goes for $106.97, means that it's overvalued by 2.9%. So that's interesting here. However, I still have a buy recommendation. I wouldn't call this a screaming buy. It's just, it's nice to maybe open a position at current prices. I wouldn't, back up the truck here. So the company, like I said, is slightly overvalued to fairly valued. I love the past 5-year dividend growth and future expected return, with the 5G and whatnot. So that's why I have a buy recommendation. But like I said, I wouldn't go crazy and just buy a whole bunch as I can at this price. I would like to see it a little lower, but I think it's a good entry point now to start a little position here. The stock is more for growth investor because of the 5G growth in the next year or two, and instead of income investors. It's a very low debt, 4%. So the 5G growth is going to benefit the company tremendously going forward. I'm personally not going to buy this company because I like to see companies with 3% or higher in dividend yield. And I would like it to have a safety margin of more than 10% undervalued. But like I said, at this price, like I said, it's not back up the truck. It's open a slight position if interested in the company. But with that, thank you for watching. If you have a company you would like to see next, please let me know the ticker and the company name in the comments. And if you find this video informative, please hit the like button and subscribe to the channel for more videos like this. And don't forget to check out my portfolio in the link in the description below. Thanks and have a great one.